All right, what's up, guys? Good morning and happy hump day. We'll do a quick sound check here on YouTube. Quick sound check in the free room. And as a bit of a heads up, guys, I got to hit the road here this morning. So I'll keep it a little bit short and sweet. But all right, what's up, Lorna? What's up, Mirza? Alrighty, guys. So here's what we got to work with. All right, there's my drawing tool. But here we are. The Bulls have given back all the progress made in structure and momentum from that push they had back here that started back in January. We found ourselves under the 21 EMA, which is never bullish. We're under the 50, which is never all that bullish. We've got daily sell signals, never bullish. You have a daily squeeze firing short, of course, never bullish. And then your 30-minute, 15-minute, 5-minute, 3-minute, 1-minute, they all print the sell signal. So at least as it currently sits, obviously everything's kind of lined up here for a move lower. So it would certainly be easier for the bears to drag it down than for the bulls to rip it higher, at least as it currently sits. So a few key levels here for, not just for today, but for the next few days. As far as support goes, the last line in the sand is a daily 200 SMA. They take out the daily 200. I think we get a pretty big drop coming on in. So there's key support. Now, key resistance is going to be 4,000, right up near your daily 50. So keep it pretty simple, guys. Work off of if-then statements. If they break 39.50-ish, they break that daily 200, well, your daily squeeze firing short, your daily sell signal, that would all suggest you probably get a pretty big flush if you take out key support. If instead they can rip it and close it back above 4,000, they might have a chance here for a push back towards that daily 21. So the clues here for the next few days are going to continue to come from the lower time frames. So clearly heading into the open, at least on the S&P futures, the bulls have got zero ammunition. No buy signals. You've got 1, 2, 3, 4 sell signals. It all leans a little bit red. A quick look here at the Qs. And your QQQ futures. Drum roll. The price action is so bad the charts don't even want to load. Now your Qs here. While they do hold up a little bit better than the S&Ps, where the S&Ps have a daily sell signal, the Qs are neutral. Structure is not bullish at all. 15-minute, 5-minute, 3-minute sell signals. So you got a lot of pressure there. Look at something like HYG. HYG goes into today's session with nothing but sell signals on lower time frames as well. So not only are there problems in the structure of the indices themselves, they're not fixing the problems in these pieces of the puzzle. The Dixie is still relatively bullish, and HYG here looks pretty bombed out. So be a little bit cautious here to the buy side for the next few days. Now, as far as looking for a bounce today, I wanted to show you guys this chart here. So we got the NQ futures. You can do the S&Ps, you can do the NQ. Frankly, when the market opens, I think you can switch to the cash products, QQQ or SPX, SPY. But we've got our 30-minute chart. We've got our Keltner channels measuring 2 average true range moves above and below that 30-minute 21 EMA. So there's our 30-minute. And then we've got a 5-minute chart and the 3-minute chart. And on the smaller time frames, we have the big 3 indicator. And your big blue line right there on the 5-minute chart, that's the 30-minute EMA from, it's the EMA from the 30-minute. So for those of you with quick hits, it's pretty much the same thing. So check this out. Let me grab my drawing tool here. Alrighty. And again, when the market opens, I think you take a look at this with the cash products. But as far as the futures go, you look at last night, for example, and last night on the 30-minute chart, the Qs find themselves down here at -2. So down there at -2. No promises or guarantees, but there does start to become a growing probability that eventually we're going to pull back or revert back to the moving average. So what's interesting is when you're down here at -2, if you can start getting signs of exhaustion from the bears on lower time frames, In other words, the bears rip the market lower, but then down here at -2, they essentially start to run out of gas. The bears running out of gas, that exhaustion, that's what can trigger your move back to the moving average. So here's what that looks like on the 3-minute chart. Right, indicators bearish. Things finally go from bearish to neutral. Things finally go from neutral back to bullish. Same thing here on the 5-minute chart. We're bearish. We go bearish to neutral. Now what's interesting is we're neutral and price continued to go lower, but you never got another 5-minute sell signal. So that's kind of an indication of a divergence. Price is going lower. The indicator not really suggesting we should be going lower. Then you get your first 5-minute buy signal, and you get that rip back up towards that 30-minute 21. And you kept on pushing, Then we find ourselves on the other side of the fence. Now, early this morning, we're up here at +2 on the 30-minute chart. So sure enough, your 3-minute, your 5-minute, your 15, up here at +2 on the 30-minute, they go from bullish to neutral, and then neutral to bearish. The bulls took the market from the 21 EMA all the way up here towards +2, and then they start to run out of gas. Losing momentum, 3-minute goes neutral, 5-minute goes neutral. If they no longer pack that punch from the ground up, typically get your pullback to that 21. So now once again, we find ourselves on the other side of the fence down here at -2. So what I'm going to look for this morning, not even so much for a trade, but just more so as a gauge of where do we go next. We made it down here to -2. And now can we get signs of exhaustion from the bears that potentially has us popping back towards the moving average? So on the 3-minute chart here, right, no signs of that turn just yet. We're still bearish. On the 5-minute chart, no signs of that turn. You're still bearish. If you look over here at the 1-minute chart, the 1-minute chart is going from bearish to neutral. So what I would look for this morning, cancel out the 1-minute sell signal, cancel out the 3-minute, cancel out the 5-minute. And then if a couple of these time frames can go bullish, we get a 1-minute buy signal, we get a 3-minute or a 5-minute buy signal, then I would look for a push back towards that 30-minute 21 EMA. More importantly, if we can't see that progress, if they can't cancel a 3-minute sell signal, they can't get rid of a 5-minute sell signal, we're probably going to continue to flush. Right? And the context is we've got a decent understanding of the problems on bigger time frames. We're no longer working under the context of a daily chart that's perfectly aligned for higher prices. If anything, it all gets a little bit suspect here over the last few days. So go into today and go into tomorrow and Friday with that overall context, where if they can't fix some of the bigger issues here, these pops might be pretty short-lived. But though they might be short-lived, they can make for decent day trades, things like that. But that is about it, guys. Every indication right now would suggest it'd be a lot easier for the market to go lower than to go higher. So anchor to your key levels. If we take out that daily 200, chances are we're in for a pretty decent flush. Just as far as support goes, there's not too much to quote-unquote save the market if we take out that 200 SMA. Your next chunky level of real support, I would see that down here at about 3,800. So keep an eye on that level of support. And for anything to be sustainable to the upside, I think we got to start to close back above 4,000. So what you really want to be mindful of is any price action that's still inside of this box. 4K's resistance, 39.40-ish is your key support. As far as swing trading goes, it's going to be very difficult to swing trade this market so long as we're in this box. You get short, we flush down to the 200 and we bounce. You flip and get long, we rally a little bit towards 4K and we flush. You can day trade these ranges. You might be looking for sell signals to get short at 4,000. You might be looking for buy signals to get long at 39.40. You can make those shorter term trades work inside that box. But as far as a trade you'd want to take the bed for 5, 10 plus days, as always, it gets a little bit easier when we break out of this range. So the next bullish swing trade, it might look something like this. wait for the break above 4K, wait for the first back test, and then potentially you're going to buy that dip. The easier short might be let them break it, wait for the first bounce, then you might try to short that first bounce. So things to be mindful of here, guys. And a real quick look here at a few individual charts, because I think these kind of speak volumes as well. A few of our childhood heroes here are looking pretty rough. So Google, who just so happens to be my favorite. Good God, these charts are slow. Boy, caramba. All right, guys, I'm not going to take you through all the charts here. Thinkorswim's a bit too slow today. But take my word for it. A lot of things out there looking like Google. Taking out your trending moving averages, printing daily sell signals. So for now, the two that actually look decent as far as your FANG stocks go, that would be Tesla and Apple. And I think right now they got a lot of weight on their shoulders as far as being maybe a couple of the stocks that could try to buck the trend and keep the ship afloat. So for Tesla here, so if you compare this chart to Google, to an Amazon, or to a Microsoft, it grades out much better. Daily structure holds, you hold your 21 EMA. And I think your next target here, if the market allows, would be that push up there to smooch that daily 200. So I think Tesla holds up a lot better than most of the market. And then, of course, Apple being the behemoth that it is. Quick peek here at Apple, who's going to open down a little bit today. A modest 20 cents or so. Yeah, I mean, Apple's in a tough spot here, guys. You can certainly see this going both ways. What would be bad for the market is if Apple starts hanging out here under that daily 200. Take out the 21, take out the 200. At that point, your next stop, probably down here towards 140. Probably down there towards your daily 50 SMA. So I could certainly see that happening. Your 15-minute chart, your 5-minute, your 3-minute, they're all bullish. Your daily squeeze goes negative. So under that 200 SMA, being as big as Apple is, being as heavily weighted as it is, that break could really do some damage to the market. Now the opposite, if Apple can close back above that 21 EMA, that might be great for the market. They might have roped in a bunch of retail traders trying to get short on that textbook break of that 200. If they can pop it from here, you might have a little short squeeze coming in. That'd be great for the market. But there's no clarity. That's the fight that we're fighting right now. Not too much clarity. But all right, guys, I apologize. I got to hit the road here. Got to bang out a couple of things here. I won't be home in time for the open, but hopefully I'll be home not too long after that. So sorry for it being a little bit quicker this morning, guys. But frankly, not too much more context other than if they dump it under that daily 200, we're probably due for a pretty decent dump. And if they can actually close it back above 4K, well, then things actually get somewhat interesting for the bulls. What's not too interesting for a swing trade is all this back and forth BS inside this box. It's a day tradable range. You short it at 4K, you catch a push down to 39.50. That's a great short for a day trade. Same thing to play that pop to the upside, but for a big meaty swing position, these boxes can be a little bit frustrating. So be patient today, guys. As always, I appreciate your time. Let me check the schedule here. I would like to think I'll be here in the free room at one point later in the week. Let me see. Thursday, no. Yeah, I'll be back in the free room, guys, on Friday at 12 p.m. Central, 1 p.m. Eastern. So swing by. We'll talk about swing trading. But until then, wish you all the best of luck today, and we'll talk soon. Adios, guys.